So that makes 12 of us. All right, we'll have more people coming into the call. Some people come in late, but we'll reward the people that got in early. So welcome, everybody. Thank you so much for joining us. My name is Thomas Eastman. If you can believe it or not, I'm originally from Colombia. I'm proud to be Paisa. I'm from Medellin. And the reason why we're doing this webinar is because I think there's a lot of people that are interested in coming down to Medellin, or interested in knowing about real estate, knowing about real estate investments. So I think this is a good opportunity for people to hear about our proposal, but also come in contact with things like visas, with things like how do you live in Medellin for more than 6 months? How do you invest in real estate? What are the minimum amounts? What are the minimum amounts for the visas? So the reason why we're doing this is we want to provide enough information and be able to answer questions to our extent, because we have quite the trajectory here in terms of real estate and knowledge in here. So the way we'll do this is we're going to have a presentation in the beginning, right? Then we're going to have a Q&A session. And at the end, I've invited some special guests, some people that have already gone through the experience. They've already lived this. They're already like you, but they're going in a little bit deeper into the process, and they've already bought properties. They've already, gone through the process. So it's good that you guys hear from real folks telling their real stories. I told them, listen, I want this to be kind of like a Joe Rogan kind of podcast, because speak your mind freely and speak your mind at ease, because that's what I like, right? And that's what I enjoy. So we're going to make it a very interesting podcast, or a very interesting webinar, and so we'll start it out. All right, we welcome Luis. Welcome, Luis. And so we're going to start out. You guys let me know if you can see my screen. All right, let me know if you can see my screen.
Yeah.
Okay, great. Awesome. So first off, thank you so much for coming into the event. We look forward to having you on the call. If you have any questions, you can raise your hand, and we'll go briefly through what we're offering here. The first initial part is showing you guys the process, but there's many other things that we do besides just real estate or real estate investment trust, which is essentially what we're doing here. But so the first thing is, we're going to start it from the macro to the micro, and you're going to see me come back and forth. I'll just be accepting people coming onto the presentation as we go. All right? So where we are is we have a lot, right? And currently, I don't know if you guys are familiar with Medellin that much, and I like to get a take on you guys as well and where you guys are coming from. But essentially, this building is located in Provenza, all right? Provenza is one of the nicest areas, in my personal opinion, in my professional opinion, one of the nicest areas to be in, right? And so what we've looked at, and what we look at as a development group is, hey, we look at places where people are going. We look at places where sophisticated people are going, because this offering, and essentially Naku is, we're offering, there's a private offering to sophisticated investors, right? And what that means is that you'll be receiving a package, a prospectus package, that signifies, hey, you are sophisticated investors, and therefore you're going to do your research, right? And before you make an investment, and before you go through the process of transferring money, well, there's some financial documents you're going to need to look at, and there's some things that, worst case scenario, best case scenario, all these things that, are centered around a REIT, or an initial private offering, which in this case is what we're doing, right? So we're smack dab right in the middle of Provenza, and you'll see in a second once I pull up the map, right? So the reason why I'm in this business, and I actually have been in this business for 5 years, right? I used to work for another company before here in Medellin. The reason why I'm in this business is because I believe that long term, Medellin will continue to be the Miami of Latin America, right? And when I say that, some people see good things and some people see some bad things, but I think that overall what Medellin is becoming, and what Medellin already is a hub, and is a hub where people are gathering and joining. And I think that's predominantly built from the beginning by people from Medellin, right? Because if you look at other people from Colombia, if you look at people from Bogota, if you look at people from Cali, if you look at people from Barranquilla, well, not everybody's super entitled with Bogota. Not everybody is so in love with Bogota as they are with Medellin. There is a sense of belonging. There is a sense of wanting to be here, and that Medellin essentially becomes a home, right? So to me, it's very interesting because I lived in the U.S., and I know many, many people that are coming into Medellin that are looking to relocate here, right? And through investments and through buying properties and through having a girlfriend or getting married, they're looking and they're seeking ways, and you're seeking ways to look into the real estate and look into the market of Medellin, right? So what we do is we identify opportunities in places where this is already happening, right? These are real photos of Provenza. What we want to do is take it from, we do a macroscopic relation when it comes to investments because we're going from the macro to the micro, right? We'll delve deep into the project, but I think that the neighborhood and where Medellin was and where it is and where it's headed are part of some of the most important questions because at the end of the day, right, this is where I live, and I've been to many parts of the world, and I've shared with many people around the world, and there seems to be a general understanding that Medellin is home. Medellin feels like home. And Medellin is far away from all the noise and the chaos that sometimes happens in the US or happens in Europe. There's a more simpler way of life in Medellin. And so there are sophisticated ways of investing in Colombia and in Medellin, but there's also people that are looking for like that calmness and that stillness in life. So we feel that the neighborhood where we're going to be is super important. So essentially Provenza, and I'm going to show you where Provenza is exactly, is about 8 blocks in total, right? It's not a huge, huge neighborhood. It's right above Parque Lleras. So for those of you that have been to Medellin, you know where Parque Lleras is, right? Wide and massive gastronomic offerings, right? You're looking at places like El Cielo, like Carmen, like Lobo, like Burdo. And what you see now in Medellin is a trend of doing things well. And I think that Medellin is starting to get it, right? Because we're looking at a very high quality of offerings that I think are also bringing in sophisticated clients and sophisticated investors, right? Which I think is what really determines what growth and development is, because we get a lot of digital nomads and a lot of people that are thinking technology and are thinking long term. So I think that Medellin is attracting the wrong kind of crowd in some sense, and we'll talk about that too, because we need to talk about it, but also the right kind of crowd, right? Obviously, after coronavirus, the nightlife suffered a lot, but if you look at right now, and whenever there's a chance to open up, right, you see places like Perro Negro, like Panorama, like Mad Records, all open, right? We're 25 minutes from the airport, 9 minutes from Plaza Mayor, which is the main event center, 8 minutes from the local airport, and there's some really cool things I like about the local airport, which now, I don't know if you guys know this, but there's a company called FlyZap that is making commercial airplanes and commercial helicopter rides available to more people. It's like the Ubers of this aerial space. And what they're trying to do is sell the empty legs, and there's something related to coming back and forth and lowering the cost for people to be able to go to Guatapé for $100 or $200 and take a helicopter instead of going there by land. So I think that Medellin is becoming a tech hub and a place where people are gathering, and ideas like this bring other places of Medellin or of Antioquia, like Jardín, like Guatapé, closer together. Bless you. So we're also close to the Golden Mile and from the metro station. So I'm just going to go back here, make sure everybody's listening. There's nobody else waiting. We got 17 people on the call. I'd like to welcome Brad and Melissa Wynn. Thank you so much for joining us. I'm actually in a beautiful apartment, which I'm going to show you guys in a second, that we also manage from Spring Living because we do property management also. But let me just go back here and explain where that is. So our project exactly, right? And one of the things that I think is super fundamental about this project is location, right? And I think that there's that old adage of location, location, location. Well, if you're going to do a development, if you're going to do a project, at least do it in the right location, right? Let's say your design doesn't go with the way that people are looking for right now, or let's say that you're maybe charging more, or X, Y, and Z, right? I think that when you have the location already set up, well, then it's a lot easier to do business, and it's a lot easier if you're investing in real estate. So we're right in the middle of Provenza. All this black dotted line that you see here is Provenza, and the rest of this area is called Parque Lleras, all right? We have famous Calle 10, Okay, this is 43A, which is Avenida del Poblado, Parque del Poblado, and then we go all the way up here to Parque Lleras and Provenza. Okay, so we're right next to El Correo, OC, and all those restaurants over there. Okay, does anybody have any questions so far? Okie dokie. All right, perfect. So now we got from Medellin all the way to Provenza. Now we're coming into Naku. All right, and where is Naku born? It comes out of an idea of, well, we know these really successful projects around Medellin. We have these success stories right next door of places that have really good design and places that have great location, and maybe places that don't have such a great location, like Energy Living, for example, but the architecture is attractive. And for those of you that don't know Energy Living, this is actually a residential building that was going to be a failed project. It's one of the most famous buildings in Medellin. But what I think that Energy Living did was very successful in terms of it's good architecture, right? It's good interior design. It's got windows, like floor-to-ceiling windows and balconies, so it opens up to Medellin. And I think that those factors, combined with the ability to do short-term rentals in a good location, is valuable, right? There was a problem with Energy Living, and that was a reputational problem, and then the kind of renters that started going to Energy Living. But we won't get into that, right? Because there, like I said, there is the right kind of crowd that's coming into Medellin, and there is the wrong kind of crowd that is coming into Medellin. Our business is in the right crowd because we don't want to deal with, hookers and prostitution and drugs, which is something that people seek when they come to Medellin. But there are thousands and thousands of people and thousands of expats that are coming to live here that are not looking for that, and that like the nature and the vibe and the people. So what we want to do is have a refuge right in the middle of the city, right? Somewhere that you don't really feel like you're right in the middle of Provenza, but that allows you to feel like you're in a natural space and have a collection of moments that I think is important for people to have in spaces. And so what we wanted to create was like an oasis inside of Medellin, okay? Because we want you to feel like you're in El Retiro, or you're by Llano Grande, or you're, in this very arboreous area, but you're in a very convenient location. And I think that mixing those two up, especially after the pandemic, is having the ability to live in a space, meditate in a space, work in a space, live in the space, and eat and entertain yourself. And so we thought about all these things as we were designing Naku. And so essentially what we came up, and this is version 30 or 40 of the renders that we've done, right? We've come to 25 Aparta hotel suites, okay? 2 floors of co-working, which you'll see here and here. Okay, I'll just do a quick zoom in here, right? And you'll have a restaurant on the first floor, a lobby, and a rooftop pool, and a penthouse, all right? So what we're thinking in this case is we're thinking in the quality of people that is going to rent from our space, right? We're thinking that you as investors and myself as an investor, I am an investor, right? And I put my own money, and I've had to sell the building to myself in order to invest there, right? My own capital is also on the line, and my reputation is on the line when we launch these buildings. So we need to be very careful in regards to what we build and what we promise and what we design, because I think that Medellin is a city that deserves nice buildings and nice locations. And so what we're trying to do and what we're accomplishing and what we've already done is creating these beautiful spaces that you would want to stay in any day, but that also make you passive income and creates equity and allows you to have a link to Medellin. Okay, so now we're coming into the renders. You can see this from the lobby. This is the lobby view. I'm just going to come in here and accept Thomas, who wants to come in. Okay, welcome, Thomas. That makes 24, 25 of us. We're nearing 30 people in the call. That's great. Welcome to those of you that are new. We're going to do a quick summary at the end. So this is the view from the facade. Okay, this is the lobby, the second, third floor. And as you can see, there's a lot of natural wood and organic materials and a lot of plants, because we want that to be a very arboreous site. Medellin is great with nature and is very natural, so we want to replicate that in the rooms. Here we come into the actual rooms. All right, so we've already seen the neighborhood, we've already seen Medellin, how it's doing, we've already seen the building itself as a whole. Now we zoom into the rooms, right? Because what we try and do before we launch, and this is a year long of work before we're able to have these calls and have these conversations, is there's a lot of design that goes in, and there's a lot of construction design, but there is also a lot of experience design that goes into this, because what pays the rate is the experience that people have in a given space. And there's a good metric that we use, and it's that there is a nightly rate where you have an expectation of what you're going to receive. But if we're able to exceed the expectations of said nightly price or the total amount of stay, well, you're going to consider that as valuable, and we believe that there's value in exceeding people's expectations. So what we want to do is create also for you as investors, and for myself or ourselves as investors, is create a very aspirational place, a place where we want to go and stay. And so what we've designed are places that are really nice, but that also justify the nightly rates. And what I mean by that is we have these jacuzzi rooms, okay, that have the ability to have 3 people inside the space, because one of the characteristics of this, I'm going to admit Jim here, one of the characteristics of these spaces, and I think the success stories can also show this, is that there is an equation whereby you have more bodies per square meter. Now that's not fitting 6 people in a tight space, but it also means it does mean that it's fitting more people, therefore the nightly rate is divided not by 2 people but by 3 people, right? So what we have the ability to do is do that inside these rooms, but also have something that I think is super valuable and that I think we learned from nature, and is having the ability to adapt, right? And so adaptability is key when you're looking at these buildings, because if there's something in the future, let's say there's another pandemic in the future, and let's say the humans are, continue destroying the planet and this and that, and there's more pandemics, well, people are still going to want to live in Medellin, and I think the most likely scenario is that they'll want to live here even more if there's more pandemics, right? Because it's open, and it's the sense of community that is created in Medellin. But I also think that buildings need to have the ability to adapt, right? And I think that adapting is having the ability to connect and merge these rooms, okay? Because by merging these rooms, we have the ability to have 1 bedrooms, 2 bedrooms, 3 bedrooms, 4 bedrooms, and connect them together. Now, the thought is, all right, if you're connecting these rooms with one another, you have, 2, 3, 4 jacuzzis side by side. Well, that's really cool, but what about the noise, right? So if we're doing all these things, then we need to have these soundproof doors that have the ability to close, right? If you just rent the 1 bedroom, but if you want to host big families or big groups, or if you want to, host like large events like weddings, or, it can morph into different things. Having the ability to do that will accommodate more people. But if we just want to do it as individuals, then we'll do it as 1 bedrooms, okay? Here we take out the balcony. And these are the smaller rooms, right? The idea that is planted from the development group is that we have 3 different segments of or types of rooms, which are the small rooms, the medium-sized rooms, and the premium rooms. And then we have the jewel of the crown, which is the penthouse, okay? And when I say the penthouse, I mean this space. Because remember, all of them are 1 bedrooms. They have the ability to connect to one another, but there's nothing like having your own private space. And we thought, well, Provenza really needs and is kind of lacking a really decked out, really awesome penthouse where people can stay. We can charge good rates. People love it, right? And so what we've designed is a space where people can come in groups, right? Enjoy the view of Medellin. This is on the 8th floor. This is completely private to the rooftop of the penthouse. And so what we're designing here is an experience where you as an investor, where you as a guest, well, you want to come here every single time, because you have the coffee shop right downstairs, and you have the OC, and you have Carmen, and you're fully immersed in this area while having this experience of being in a super cool place, right? And so we think that provides value, and that the land around it, the Provenza area around it, demands this kind of product. This is the building lobby, okay? We have a differentiated access from the actual lobby, okay, which is the apartments and then the restaurant. The restaurant is in the back. We have a co-working space, which is going to be compliant 100% with COVID, so that even during the pandemic, we're able to rent these out. we believe that people are going to not, if you're staying in your own private place in the hotel or in the apartments, well, you don't really want to work where you're living, right? And it's not really a place where you maybe concentrate. There might be a lot of distractions. So if you do want a place to work, well, we have these spaces, and we have them as individual places, but also as places for 7 people and 9 people. And lastly, this is the rooftop pool. All right, this is open to guests. This is open to investors. So if you're in Medellin and you want to come by and hang out at the pool, you're welcome to come and hang out at the pool. This is actually one of the reasons why I'm investing in this project myself. That's one of the things that we instilled as an initial development group, because to me, this is aspirational, and I have X number of shares. Maybe I'll have more shares or less shares than each one of you. But I think that me being an investor also. It provides a sense of, it's really emotional when it comes to being excited about this, because I want this to get done as soon as possible and as cool as possible, and you'll find that that's the same case for the builder and for the previous owner of the land. And the story goes, I called on the phone one of my good friends, whose name is Lucas, who was a developer of this project. This is this is about a year ago, right? And I said, listen, do you have any lots for sale? Do you have any lots that you want to co-develop, and that I have some money to invest? Like, what can we do? And he sent me different options, and included in that was Naku. But I don't really get involved in projects that if I'm not involved in the design, if I'm not involved in the experience, if I'm not fully immersed in it, and if I'm not invested in it, the most likely case is I won't be able to sell it, and my team won't be able to sell it because I won't believe in it, right? And I think there's a major trust factor when it comes to doing business in real estate, and it's the trust factor of, hey, I've already sold this to myself. I've already looked at the numbers 3, 4, 5, 10, 15 times because my money's on the line. And I could have taken out a cash payment as a commission, right? We get a commission, Spring Living gets a commission out of selling this project, and we can take out a cash commission now, but what we thought is, hey, do we really firmly believe in this? And I think the answer is yes. I believe 1,000% in Provenza. I believe 1,000% in Medellin. I believe in the tourism in Medellin and how it's going to bounce back sooner rather than later. Or worst case scenario, right? And you need to consider worst case scenario is we turn this building into a long-term rental, okay? And people are living here. And so having the adaptability and the ability to open up the rooms, well, that creates a different kind of building. And so we're able to morph and adapt to the current market situations, but the best case scenario and the worst case scenario look pretty good, right? And worst case scenario, we own property in Provenza, which is prime time real estate, right? If everything goes bad and nothing works, at the end of the day, there's an underlying asset that has value, and that's the lot, and that's the building. And so we've protected ourselves, and we protected you in different stages so that the money is all protected because we're raising funds. But we've also made sure that this is a cool experience so that the financials make sense. So I'm just going to go a little bit deep into the innovation perks and technology aspects of the building here. Does anybody have any questions so far? Just go back here and see. Anybody have any questions? Okie doke. All right. So that makes 30 of us right now. There's 30 of us at this moment. How much discount do friends and family get staying at the hotel? So I'm going to go into that in a second, Mike. Give me 1 second. That's a good question. So I'll delve deep into that in 1 second. So there's a cool section here, which is called the events menu. And so we're thinking now, all right, this is already done. This is already built. We're done, right? This is post building. This is already the experience. And so it's the detail of the detail of the detail. We need to justify nightly rates via the design, via the location, via the experience that people have. So part of that is having 2 segments into the kind of experience that people get. And what I mean by this is you'll see all sorts of mainstream events like the soccer games, like the cultural events, or like, the concerts and stuff like that. There's the mainstream events, but there's also a magic to the intrinsic and the endemic amount of businesses that come from Colombia and that come from Medellin. And so there's a little empanada stand, and there's the little tamale stand, and the small entrepreneur, the 76-year-old guy that's been selling, artwork for forever. We want to showcase these people because we believe that one of the best assets that Medellin has is its people. And so, yes, these are very international events, but you can have those anywhere. You don't really get to see that value in Medellin because you're always going on the highway at 30 miles or 60 miles or 100 miles an hour. So we want you to stop and kind of take your time to explore Medellin and see the real Medellin, because we believe there's a lot of value there. So that's part of the experience that people get. The next thing is we're going to have different sources of revenue coming in from the restaurant, coming in from the co-working, coming in from the apartments. And so the way to give some dynamic to all of that and give dynamic to the restaurant especially is we're going to have people in the co-working. We're going to have people in the rooms. And so we think it's a very smart way that if we get income from the restaurant and a percentage of the income, because remember, we get a fixed rent, right, which guarantees a fixed income to the project every month, no matter what. But we're also having a percentage of the sales of the restaurant, right? So the way to increase the sales is a very clever way that we designed that I think is pretty cool. And it's that at 11:30 a.m., right before lunch at around 12, and right before dinner, 5:30, 6 p.m., sending out carts all around the building with a little taste, just a little taste of what lunch and dinner are going to be. That's delivered to your door. That's delivered to your workstation with a little piece of, a fire, a little crackers or cookies or wine and coffee. It's all coming from the restaurant, but the idea is that we're inviting people, and the prospect is, hey, do you want to get the lunch right now, right? You can get it delivered to your door, or you can get it delivered here. But if you don't get it, then it adds to the experience because the building is coming in through all of your senses. And I think that's very valuable. So when you're able to charm people in that sense and in that manner, obviously the food needs to be great, because if you're delivering out, and excuse my French, shitty food, then it backfires, right? So this is maintaining the highest quality of service that we can get, but it also adds to the experience, and it's different. You won't really see this anywhere else. Another really cool aspect about this building is supporting local artists, and we're really big about supporting local artists and local people and local entrepreneurs, because we're local entrepreneurs, right? We have the capability and we have the luxury of saying, hey, there's 30 people in our webinar, there's 40 people in our webinar that are paying attention and are looking at this excuse me, they're looking at this, and we have the ability to do email marketing and Instagram ads, and we have that ability, but most people don't have that. And I think that it's valuable if you give them a helping hand, right? So the idea is that we're going to create income for ourselves, obviously, right? So we're going to sell these pieces, and all of the artwork that is in the building is for sale. You could take all the, all the paintings and all the sculptures home, but if you don't, or if you do, right, once people buy them, the idea is to support the local artists. So a percentage of that goes to us, and a percentage of that goes to the Colombian artist who created it, only Colombian artist that we're going to have there. And lastly, part of the experience that we want people to have here and kind of bringing up what really is really cool about Medellin is that we're going to have a plant nursery, and we're going to allow somebody to come in here. We're going to have a plant nursery right at the lobby where we're going to sell plants, right? Orchids and plants that are endemic to Medellin, because maybe this is not super profitable, right? And maybe the nursery is not as profitable as can be, but this part doesn't really matter. This part is not about the money, and I think that there's more important things than money sometimes, and most times, right? And I think that it's those moments and those collection of moments that you're able to have they're super valuable. So having a plant nursery here is also showcasing the beauty of the plants and the flowers that Medellin has. So that's part of what we want to include. And lastly, part of the Colombian library is showing all the volumes in the history of Colombia so that you can read it if you want to, okay? Now, really quickly, I'm going to delve deep into the technology. I'm a big fan of Jeff Bezos. I'm a big fan of Elon Musk. I'm a big fan of Mark Zuckerberg. Not just because they've been able to create these vast empires, but because through technology, they've been able to better their businesses and automate and grow sustainably and responsibly, because I think that this business can have the ability to, explode and grow really fast if you know how to do it well, but you also lose attention to detail. And, in working, and looking back and for working for other people in the past, that's something that people get discouraged with, because things are amazing until you start to pay attention to the maintenance and to the cleaning and to the upkeep, which I think are really important. So what we're thinking here is utilizing technology in order to not have those things happen. And property management is not really a fun job, right? It's great because you get to meet a lot of people, but it's putting out fires. And so technology is a way to do that. So we're fully prepared, right, for the COVID situation with UV, right? We have these guns and these disinfecting spots all around the building where you can disinfect yourself just very easily, right? We also have the ability at a very low rate, right, to connect your apartment to Wi-Fi, because these are actual apartments. These are not hotel rooms only. These are actual apartments, because we believe that people want control of the space and they want control over their experience. And so you're able to control your whole room with your voice, right? Just connect to the Wi-Fi, to the internet, just connect your phone with Spotify and say, hey, Google, play my Spotify chill list, or, set the temperature of the AC to 7 or 70 degrees, or the maximum temperature or the power to 7, or manage everything through your voice. Stop touching, right? We need to stop the spread of germs. And so what we're thinking is control everything with your voice. Wireless charging stations, and lastly, one of the really cool features that I think that this is actually one of the ideas that we presented was having a smart bracelet right when you come in. So you as an investor, right, you as a renter, you have this smart bracelet that it gives us as a project and as a building the security of knowing how many people are in the building. But you're also able to purchase with that bracelet, and you're able to go to the co-working, and you're able to go to the pool, and you're able to open your room, make payments in the restaurant. It also learns from what you like, right? So that it recommends what you've ordered in the past, and through technology, we're able to know our guests a lot better, so that every time they come down, it's like that, you'll see that in movies. Do you want the same drink as always, right? Do you want the same as always? And I think there's value to that, because you go to the places where you've had fun and where people know you. So I think that's important. So I'm going to get here into the ownership and how everything works. So it's essentially that we've created a way to own real estate without having liabilities of owning real estate, okay? And there's a really important aspect of taxes whereby corporations have the ability to manage taxes in a very different way than an individual does, right? So let's say, for example, if you own a specific title, a specific deed, which you can, there's 25 deeds or deeded apartments in this project. One of the problems when it comes to taxes and to the efficiency of your investment is, well, that ownership implicates some costs, and it implies some extra costs that don't happen in the corporation, or that the corporation is able to better absorb because there's other expenses, and there's better ways to handle income, especially larger amounts of income coming in through a corporation than through the individual. So we've designed this so that the ownership is done not through the actual ownership of the deed, but you're owning a percentage of a corporation, okay? So what that means is that this in Spanish is called proyecto asociativo, or like associative project. The similar, or the metaphor that you can consider this in the U.S. is a REIT, right? A real estate investment trust. So what that means is that there is an initial group, which is us, where we put a lot, where we put some capital, where we put our own, we call that in Spanish honorarios, which is the payment that for example, Spring Living gets as a commission, or the builder gets as his fees. Well, we don't cash that. We don't get a big fat check for X amount of millions of pesos. Now, what we're saying is, hey, let's reinvest that back, right? Let's say there's no profit at all. All that profit is reinvested back into the building because we believe in it. And that commission can turn into 2x or 3x over the course of 5 or 7 years. And the kind of horizon that I want everybody to think in this project, and you might have different ideas and might have different time horizons, but I think the most profitable time horizon, given the area and given the timing of Medellin and given just like the global atmosphere, the timing of 5 to 7 years is probably the best horizon you can get, because where do you see Medellin going in the next 5 to 10 years? Where do you see Provenza going in the next 5 to 10 years? Do you think that tourism is going up? Do you think that more people will want to come to Medellin over the next 5 to 10 years? The most likely answer to those questions is yes, okay? So what that means is that through this investment, you're able to do two things, actually three things or four things. The first one is have the ability to have ownership in a building, right? This is indirect ownership, but you have a direct relationship between what happens to the building and its future as what happens to the land, right? We can't sell the entire building unless we have a vote for that. So you have a vote, you have equity, you have ownership. The second thing you have is income, right? That income and that cost, that investment, right? There's an initial investment, but there's also an income that you're getting from that initial investment. We know exactly how much this building can make on a monthly or on an annual basis because we've already seen this and we've already done this in other projects. The third thing you're able to do is acquire a visa, right? There's the investor visa and then there's the residency visa, which we'll touch in a second. It's got, each one has its pros and cons, and we're going to talk about that. And then you're also able to use this building, all right? So we think that those four factors are very compelling for an investor that is looking to get their feet wet in Medellin. You've never invested in real estate before, or maybe you want to diversify, or you want to change neighborhoods, or maybe you've invested in Laureles, or you've thought about Envigado, but you're not so sure. Well, what we've seen, and based on our market research is, and I'm going to get into that in a second, is based on our market research, we've seen that the best neighborhoods is the neighborhoods that have the highest amount of demand, right? Did I allow this person to come in? Yeah, I did. So we've seen, based on research that we've done, where people are coming from. And these are questions that we asked ourselves, and I think that the quality of the projects and the quality of the answers depend on the quality of the questions you're making yourself. And you have to be really careful when you're asking these questions because they can take you one way or the other. So the questions we asked ourselves, the first one was, where are people coming from? All right, if we're going to have a building, where are people, like what parts of the world are going to be the parts that are going to be sending us our clients, right? Is it the US? That was our theory. Is it mainly the US? Is it Europe? Is it Mexico? We wanted to get the real stats. So what we did is we got numbers from the international airport, and we got international arrivals to Medellin, the Jose Maria Cordova Airport, which is 25 minutes from Naku, if you've been paying attention in the presentation. We tracked the amount of people that are coming down. And surprisingly, and not so surprisingly, the US was one of the highest when it comes to individual countries, right? It's a very easy flight from Miami, 3 hours, right? From Copa, Delta, Spirit, you're coming down, it's an easy flight, right? So the majority of our clients, when it comes to investors and when it comes to renters, is coming from the US, okay? This is mainly because it's a geographical, and it's also an exchange rate thing, right? You're looking at Medellin because you like the weather, you like maybe the women or the men, like we don't judge, depending on what you like, but you're also looking at the cost of living, right? Because you're looking at today you're exchanging your money at 3,600 per dollar, which is great, right? So you're also looking at how much you're paying on a monthly basis or a yearly basis. All right, so we know where people are coming from, right? Predominantly the US. The rest of the world is about 30%, but also people from Argentina, Panama, Peru, Germany. We get a lot of people from the UK. And then we asked ourselves, all right, where are those people going, right? Once they come down from, all these parts of the world, where are these people going? And what we figured out was, hey, a large majority of people are coming to El Poblado, okay? And that's not so surprising because Poblado is very safe. It's very international. It has a carulla that has all your Heinz and your international brands, and I can't think of any right now because I'm on the spot. But El Poblado is very international. It's going to feel very much like Miami, right? Which is good and it's bad because we get a lot of Americanization, which in some cases can be bad because, as I said, we get the wrong kind of renters sometimes, and that's our job to figure out as the property manager and saying, hey, who are we renting to? But predominantly El Poblado, okay? Then, as people come more often, they'll go, okay, what else is there besides, all these really nice places and high-end restaurants? Is there a more authentic Medellin? And they'll go to places like Laureles, like El Centro, the rest of the metropolitan area, right? But that's only 20% of the people that are coming down. 80% of people, and this is a good Pareto rule, 80% of people are going to 20% of the places, right? So once we know where they're coming from and where they're staying, the next question we're asking ourselves is, all right, well, how much are these people willing to pay per night on average? And so what we figured out is, and this market study was actually done by a company called 4S. You can look them up on Instagram and on Google. They're pretty big. They do market research for real estate. And so what they figured out was, hey, during 2018 and 2019, the average daily rate was 244,000 pesos on average. Okay, that's roughly about $70, $80 at today's exchange rate. Okay. If you look at Laureles, well, there's less offerings in Laureles, less quality offerings. It's more mom and pop, right? You're looking at half the nightly rate. And if you're looking downtown, well, I don't recommend you going downtown, right, by yourselves, unless you want to explore. It's half of the rate, right? This is more backpackers and hostels and stuff like that. So obviously El Poblado being the highest rate and having the highest amount of demand, well, that's going to drag up prices in the whole average of Medellin. All right, so far so good. And then we said, all right, competition-wise, let's do a benchmarking. All right, how are we doing in terms of occupancy? How are we doing in terms of rates? And so what we figured out of these 26 hotels, and you have the Charlie, you have the Valkyrie, the Jettis Express, all these hotels that are around Naku, which are right there, right? How do these people do? And we went all the way down to, below Astorga, all the way down to Manila. 26 hotels, 626 rooms in total. 2018 and 2019, the average occupancy was 75.5%, right? Now, if you look at 2020, then you're going to see a very different scenario, right? Every single business is going to see this, right? And so there's that correction period of 2020, 2021, even 2022. But we consider that, it's like stadium lights. You can turn them off and it shuts off immediately. And if you look at, the first month of the quarantine, April, we had 10-20% occupancy, right? In Medellin, Bogota, Cartagena, I have input on all three of them. It was low. It was really low, right? But like stadium lights, it takes a while for it to get back. And so it will definitely recuperate up to the point where it was, but it gives us really good stats on where it was up to December 2019, because that's the trend that Medellin was following. This is the trend that Medellin has followed over the last 10 years, okay? So what we're doing here is we're providing ourselves and we're providing you with the right data to make a well-informed investment. Because it's not just looking at, well, are the apartments nice? Is the income right? We need to look at the macro and the micro side of things, because, if you're not able to gauge where people are going, all this tourism could be going to Rio Negro. And if you're making an investment in Provenza, well, that doesn't really make sense, right? And so I think the inverse is true. There's not many people going to Rio Negro. There's a lot more of this people coming into Medellin to Provenza, okay? So I'm going to skip the payments and the time frames for a second, right? These are just some of the renders that we have for like the menu of the restaurant and the inside of the rooms, right? How it's going to look. So I'll just go through this one really quickly. And I just want to open up a quick space for questions here, because I'm seeing some questions. So let me just answer some of these questions that I'm seeing on here. All right, so how much discount do friends and family get for staying at the hotel? That's the first question that we have. The answer to that is we need to be very careful, and we're going to go into the finances in a little bit. We're going to go into the floor plans and the contract in a little bit, and some of the renders. But what we need to be very careful with is we have a projected ROI, right? We have a projected demand. We have a projected number for what this building can make on a monthly basis. So we need to be very careful if we have too many nights that are blocked by the investors, because that means the bottom line suffers and we're losing out on income, right? So the fine line between that is, hey, our proposal as an initial investor group is giving you guys 5 nights a year, and that's Aaron. Thank you for joining. We have Jeff also here joining us, which are our special guests tonight. So thank you for joining. We'll have you guys in a second. And so what we have is a very fine balance between too many free nights and not enough, because we know you also want to come down here and stay. So we have said a proposal is 5 nights a year for free, okay? And then what we do is that income that, let's say you stay for more than 5 nights, you stay for 10 nights or 2 weeks, 3 months, or whatever the number is, well, then that's deducted out of your statements. That's deducted out of the income that you're making, so that you don't have to, pay money when you stay. You're essentially deducted from that, okay? How much are property taxes and who pays it? That's a great question. So property taxes, you'll typically find that property taxes in Colombia, if you look at the deed, right, there's two values. There's the commercial value, and then there's the registered value with the city. The registered value with the city is significantly lower than the commercial value. Typically, what you'll find for taxes is that the commercial values, the taxes, is that the city value is 0.5%, the taxes are 0.5% out of that city value. So if a property is worth, mil millones, 1 billion pesos, right, then the valor or the city value is about 500 million, and 0.5% of that is going to be for taxes, right, property taxes. The other taxes we're going to be looking at is the corporation tax, right, the income tax. So the corporation is the one that pays the taxes. We're taxed at 9% on the corporation because we have tax benefits thanks to the orange economy. And then what we do is that the corporation pays a 9% tax, and then once we distribute the dividends, you guys pay a 5% tax. So that's 9 plus 5, that's 14% interest rate on the taxes, okay? Have we considered electric car charges? We actually would love to have those. It's just that there's not enough space in Provenza to do them because we'd be taking a portion of the street. So we needed to discard that because we don't actually have parking. We have a convenio, we have a partnership with Paul, which is a close by parking spot where we can park the cars that are coming into the place. Because we foresee that most of our clients are not going to have a car, okay? Are we focusing on Medellin only? Possibly work with an investment group on other cities? Listen, I think that Medellin is a great city. I think that Cartagena is a great city. I think that Bogota is a great city. But if you look at the kinds of markets, they're very fundamentally different markets. Bogota is a business market, all right? It's a business city. Most people are going to Bogota to work. Medellin is more a leisure city. People can live here for 3-4 months, and we get a lot of digital nomads. If you have a good internet connection, the most likely case is you'll stay here for 3 or 4 months, okay? Cartagena is more a weekend party scene, all right? It's full during Friday, Saturday, Sunday, but if you're looking at Monday, Tuesday, Wednesday, right, occupancy goes down. So what we consider is stable occupancy in places where we invest, right? I think that Medellin is providing that in a sense that there's people coming down every month. And even the seasonality is we get snowbirds coming from Europe and we get snowbirds coming from the US. And now that is filling essentially every single season. So that's really good when we consider that. So we haven't yet expanded to other cities. Are there monthly or annual fees to the owners or investors? Okay, so that's a great question. We're not going to ask you for more money, all right? The idea is that once you're invested, right, the corporation takes care of all these costs. And once we have these income, and I'll go to the income in a second, we're going to distribute these dividends after they're done with the cost. So this is already deducted, or the costs have already been deducted, okay? I'm going to continue to answer some of the questions in a second. I'm going to go into the numbers really quickly, and I'm going to go into these answers in just really, really quickly. Because I think that this will answer some of the questions that you guys are making. So I'll just zoom in here really quick. All right. So, perfect. So we have different sources of income, all right? And I'll just go through these very briefly because I do want to answer the other questions that you guys are making. So the first one is we have a co-working space and we have a restaurant. And so we have 75 seats in total of co-working. We have 200 square meters for the restaurant. And then we've estimated a total price per seat per month, both on the co-working and on the restaurant. If you look at WeWork, right, up to 2018, 2019, all right, and you're looking at a seat in WeWork or Tinko, which are the two biggest ones here, you're looking at 1.2, 1.5, 2 million pesos even for a co-working, and actually Aaron can confirm this in a second. You're paying high rates for WeWork, Tinko, and co-working spaces. If you want to be ultra conservative, right, what the kind of the lower end co-workings are charging, you can look at 650,000 pesos. All right, this is not including a kitchen, because we have other things inside here, but this is like very simple co-working spaces are going to charge you about 650,000. The reality of this place in the location that we are in Provenza, with the building that we have and the perks that we have is, well, we're more in the middle, right? We want to be more conservative. Yes, we can be all the way up here, but, let's be realistic and let's say that we're more in the middle of those two, okay? Same happens for the rate. So we have a very conservative rate for the commercial restaurant space, a more realistic one or an optimistic one. And I've made this so that we can play around these numbers and we can consider a worst case scenario, a realistic case scenario, and a really optimistic scenario. All right, so what we do essentially with this income is that we have 51 million pesos of income from the co-working, which is considering an 80% occupancy between the individual, the individual co-working spaces, or the 7 places, or the ones with the 8, the night spaces inside each co-working. So you'll see that better in the floor plans in a second. All right. But if I play around with this occupancy, I can put 50% or 20%, and you can see how those numbers vary. All right, or vary. Sorry. The other thing we're considering is a restaurant where we have a fixed income per month, where we have, we have a restaurant that pays us a fixed rent, whereby the occupancy doesn't change from 100%, okay? So we're not considering in the scenario any percentage of sales that the restaurant does. We're only solely considering the fact that we have a fixed rent, all right? Any additional money that comes in is the cherry on top, okay? So that is about 71 million pesos between the co-working and the restaurant, all right? Here, we're considering an exchange rate of 35.60, but I just want to look very quickly at today's exchange rate to see what it is. So we're using the right exchange rate for the right purposes. All right, so that's going to be 35.29. So we're going to be using a rate of 35.29 for our projections. Okay? Today's rate, if we're renting at today's rate. Okay? Now, what we consider based on our market research is, if you look at the average of Medellin, right? And so if you multiply this rate, the smaller apartment rate, by the exchange rate, we get a price per night of 282,000 pesos, all right? But if I go back to the presentation here, right, and I zoom back into the average of Medellin, well, what you can see is that we've positioned ourselves right close to the average of El Poblado. All right, so we're saying, hey, our smaller rooms, all right, are right in the average of what other people are charging without everything that we have. All right, so we're saying that, hey, we're about 40,000 pesos, or like $15 more expensive than the average on the small rooms. Okay, that's our base. That's where we start, the average. Okay, then our assumptions and the way that we see this is, all right, we're giving a $5 premium. Right, a $5, let's omit Spain here. We're giving a $5 premium for height. All right, it's called a height premium. So we're saying, hey, our small rooms on the 4th floor are $80. Then it's $5 more expensive if you want to be on the higher floor, or $5 more expensive if you want to be on the top floor, which is the 6th floor. Right, then we have the penthouse. Then we're saying, all right, if you just have a kitchen, all right, from the boutique suites, we're giving that a $15 premium. We're saying having a kitchen is a $15 premium, okay? Then what we're saying is, hey, for double the size of these boutique suites, it's double the price. You want to have a jacuzzi, you want to have your own private jacuzzi for yourself, and want to have your own private balcony, then you're going to have to pay double, okay? That's double the space, double the rate. And what we're saying is for the premium suites, for the premium suites that we have a kitchen, we're saying it's a $40 premium if you want to have a kitchen and the premium suite, all right? For the penthouse, we're considering $400, okay? That's a 2-level penthouse with a private jacuzzi. And then what we do here is just, we quantify the amount of apartments that we have. So we have 25 apartments in total, divided by the number of floors that we have, right? And the quantity and the type of that different one. Kitchen and jacuzzi, boutique 3, boutique and kitchen, right, and so forth. Then we have the 7th floor, which is the penthouse. So in total, we have 25 apartments in total, okay? The total number of meters is the sum product, which is multiplying the number or the quantity of that type of room times the square meters, and that gives us a total number of square meters only for the apartments of 387.49 square meters, okay? Then what we do is we just simply take these nightly rates that we have in dollars, okay, these nightly rates, and then we multiply it by the day's exchange rate. So the reason why I changed that is I wanted to use the day's rate, okay? These are figures for the nightly rate. The way to calculate the gross income, right, and an 80% occupancy, remember, up to 2019, the occupancy in this sector was 75.5%. What are we saying? We're only 0.5% more efficient than the rest of these people, all right? Only 0.5. What that means is the monthly gross is calculated by having the quantity of those rooms, the nightly rate in pesos, which we converted from dollars, the occupancy, and then we get a monthly gross, all right? And then we get an expense ratio, which is, all right, we have a lot of data that comes from other operations, and we have that roughly the expense ratio of all the income, of all the variable costs and the fixed cost is roughly 30 to 40%, all right? What we're saying is, hey, we're only 2% more efficient than the least efficient people or the least efficient buildings, which is 40%, right? There's outliers, obviously. There's 25, there's 45, but we're saying, hey, we're 2% more efficient than that, what the average medium or the average is taking us, all right? That includes maintenance and cleaning and upkeep and staff and, taxes and utilities and everything that is related to the monthly operations, okay? And then we get a net income, which is we just simply deduct the monthly gross, and we deduct the expense ratio, which is 38%. All right, that gives us apartment nets in total. So what we do is we just have a small summary here. All right, we have a small summary of how much the apartments produce. This is just a sum of everything that is produced here. Okay, we have how much the co-working produces from up here, and how much the restaurant produces from up here. All right, these are our assumptions. So what that means is that if you add those three revenues up, and we're not considering the percentage of sales for the restaurant, and we're not considering what the art in the building that we sell makes, right? What this building can be producing on a monthly basis, net of all costs, right? And the costs between the co-working are already considered in the apartments because these are shared costs, and it's the same staff, and it's the same utilities, and it's the same property manager. So all these costs are already included in here. Well, net is 220 million pesos on average, right? Every month. If you want to annualize that, right, you just multiply it times 12. So what we have is a building that we know that net, if you look at this, right, if you're looking at this render of the building itself, right, and that's taking a little bit to load. Well, this building that we have here, right, has the ability to produce, thanks to the commercial aspect of it, 2.6 billion pesos a year. If you do the conversion to dollars, right, well, the conversion to dollars is simply dividing that by the exchange rate. That's around $750,000 a year, all right? $750,000 a year. All right, $750,000 a year. All right, so what that means is this. There is a corporation that we created as the initial investor group to hold this asset. All right, so we said that this was done through a corporation, an LLC, what we call in Spanish as an SAS, right? An LLC is an SAS. So what we said is, hey, the initial investor group, based on what my this is called aporte in Spanish, what my capital investment is as an initial investor, what the lot is worth because the owner of the land didn't sell his asset, he put the lot towards the project, and what the construction company or the builder is putting it towards the project is 9,500 shares, all right? The total number of shares that they are in Borneo Capital SAS, and that there ever will be, unless we vote on it, is 20,300 shares, okay? So the math goes like this. What we do is, in order to raise capital, and this is where the REIT portion comes in, the Real Estate Investment Trust, is that we have outside investors coming into the project at 10,800 shares in total, okay? So we issue 10,800 shares. This is a second share issuance contract. They're the same type of shares. These are ordinary shares, right? They're all the same, but what we do is we do a second share issuance whereby you buy a package, one share package, or you invest in a package of 111 shares in total, right? And divided by 10,800 shares, that's a 1% investment in that bag. in this, 54% or 10,800 shares, or 111 divided by 20,300 shares is 0.5%. Okay, so out of the whole thing, that roughly $32,000, $34,000 investment buys you a 1% in the 10,800 shares, or a 0.5% in the total. Okay, so what that means, if we go back here, well, if the number of the income is 2.6, right, and the total number of shares is 20,300 shares, what that means is that there is an income per one share, just one share, all right, of 130,000 pesos per share. Okay, but you're not just buying one share, you're buying a package of 111 shares. Okay, what that means is if you multiply the income per share times the number of shares that you buy, well, on a yearly basis, you're probably going to be making about 14 to 15 million pesos a year. Okay, if you want to get that in dollars, that's going to be roughly $4,000 a year. Okay, at today's exchange rate. So what that means is if you have a value, a price of what the shares cost, which is 122 million pesos, divided by today's exchange rate is roughly $34,000 on an initial investment. Well, if you divide the total income that you get net divided by your total cost, that's going to make you 11.85% to 13%, depending on what level you're in, because we have discounts based on volume. This is the amount of the price of the package per, right? So you get discounts based on this. You get a 4 million peso discount here, 6 million peso, 8 million peso, and so forth. And so that obviously gives you a better ROI. And here is our payment plan, all right? The first 20% is paid on the deposit of your first payment as an investor, all right, which is the signing of the contract. The 30% payment comes when we start construction, okay? The other 20% payment is when we finish the structure, 6 months after we start construction, we finish the structure of that. And then the other 30% is for us to deliver, furnished, and operational in 2022, Q1 of 2022, another 30% payment, all right? This is what you're looking at in terms of dollars, right? 6,000, 13,000, 20,000, 26,000, and so forth. All right. So those are the numbers. I'm going to get into the floor plans in a second, into the contract, but I just want to go back here and answer any questions that people are making. Okay. So I've already answered that. Is the nightly rate? All right, is the nightly rate deducted for staying fixed at the beginning of the investment, or does it float with the market rate? So it floats with the market rate, right? It's not the same if you're staying in high season than when you're staying in low season, all right? So what we have here is that if you're staying in high season, you're going to get charged a little bit more than that, all right? You do get a discount. You get a 15% discount if you're an investor, but it does float with the market rate. Okay, I'm going to answer these two questions in a second, but I just want to give the floor to Jeff and Aaron. Jeff, if you want to take the floor first and kind of give us your experience on everything, then we'll have Aaron coming in and saying some things. But I just wanted to give some space to Jeff. Jeff Medellín is actually a guy that's been living in Medellin for quite some time. He has different investments in Medellin. I just wanted, all of you guys to get his take on what Medellin has been, for him and how it's worked. So Jeff, if you want to speak some words and just speak the truth on your Medellin experience and your Medellin investments, so that people can get to know you and kind of take a little bit from your experience.
Sure. Hello, everybody. Can you hear me?
Yeah, we can hear you just fine, man.
Okay, great. Thanks, Tomas. Right, so as Tomas said, I've been living in Medellin for a while, over 4 years, 4 or 5 years, something like that. So I own 2 apartments in the city. I also have a hostel, a little side business, and in the process of starting up actually a few more businesses. But just to talk a little bit about my apartment investments that I have. Actually, my very first apartment I got through another real estate agency that Tomas used to work for, and he sold me the apartment actually back in the day. It was 3-4 years ago, and that was a new building construction, a little bit different than Naku, but a nice building not too far from the Parque Harris area. Has a nice pool and jacuzzi on top as well. And I have that, and then I have my other apartment that I live in right now. And so I'll just talk a little bit about the reasons that I made an investment in Medellin, or made investments in Medellin. So, well, one of the reasons was just for an investment, right? I had some extra cash, and I wanted to put it in real estate, and instead of putting it in the stock market or something like that. I personally kind of had bad luck in the stock market and better luck in real estate. So that's just something that I was looking at. I was also looking to get a visa. So, some of you may be interested in that. I assume most of you are from the States or maybe Canada, possibly Europe. If you're interested in moving to Medellin, it's a really nice place to live. I mean, I've been here, as I said, 4 or 5 years. It's very nice lifestyle. It's a beautiful city, lots of restaurants, cafes, that sort of thing. And so when I invested initially, I got not just the apartment, but I also got a lot of assistance, legal assistance, and that sort of thing. I set up something that's called a SAS, which is like an LLC in the U.S., so my own company. And I got assistance setting that up, and also got assistance getting the visa. So it was more than just buying an apartment. It was also getting myself set up here in the city. So that worked out really well for me. And the other big reason that I was interested in investing in Medellin was for diversification, because you never know where the U.S. dollar is going to go. And there's some, I personally think there's some red flags in the U.S. economy right now, and things could go south. I could be wrong. I'm no financial expert, but I think it's always better to have some of your resources in different places and not all your eggs in one basket. So that's what I was looking at, and in Medellin in particular, I think there's a real growing market here. And I'm kind of talking, not including COVID. COVID kind of throws everything out of the window, but as we all know, it's a temporary situation, right? Hopefully we get through this mess in another 6 months or a year and things are back to normal. But COVID notwithstanding, there's been just more and more people coming into the city all the time. In fact, I see a big difference in the number of tourists in the city here as opposed to 3-4 years ago, 5 years ago when I got here. It's probably, I don't know, must be 3 or 4 times the number of tourists in the city, again, on COVID time. So there's a lot of people coming in, and the market here has been, in general, I think it's been increasing. The property values, at least in this area, have been increasing about 7 or 10% a year on average. So on top of the income that you can get, there's property value increase potential as well. So there are a lot of things that I think make investing in Medellin a lot of positive aspects. Let me put it that way. But I also want to talk about a couple other things. I was just scratching some notes here. So, a big part of the reason again that I got in was making my original investment was so that I could have these other services, accounting services, setting up a corporation, also legal services to make sure that all the transactions were done properly. I've seen people ask questions. Sometimes they say, well, can I just go on my own and buy some property in Colombia? Never been to Colombia before. Maybe I'll just go and try to do it by myself. And I would say definitely not. This isn't the United States. It's not Canada. There are some traps here that you need to be careful for, and you really need to have, if you've never done it before, especially, even if you've done it before, you need to definitely have some good legal help to make sure that all the papers are filed correctly. There's also the concern about getting money into Colombia. Even that's pretty tricky. That you need to set up a certain type of a bank account or a brokerage account, and then you need to file a lot of paperwork. So they do a lot of background checks on you because there's obviously a history of narco traffic coming from Colombia, and they're trying to make sure that the money is coming from a legitimate source. And so they watch all that, and they make sure that everything's in order before they allow you to bring money into the country. And that's also something that the previous real estate agency helped me set up. Now my other apartment, the one that I live in now, I sort of did that more or less on my own. I went through a local Colombian real estate agency, but I also did get some legal help to make sure that was all done correctly. One thing in general, I'll warn you about, if you want to, if you're looking to make an investment in the city, that real estate brokers here do not need to be licensed. So there's a lot of guys that just, they live in a neighborhood and they know that their friend or their neighbor is selling an apartment and they see an opportunity to make a commission off of it. They don't really know what they're doing. And matter of fact, I don't know if you remember, Tomas, a few years ago, I almost bought a property outside of the city, but because there was one of these guys who, just a local guy, he didn't know what he was doing. He kind of screwed up the deal for me. I was that close to buying this property, and he messed it up. So anyway, that's one thing. That's one thing to look out for. But I also got into this the first investment because it's kind of a similar arrangement to I think what you're talking about here today. I didn't see the whole presentation, but my apartment's in a rental pool. It's in a building with 80 apartments, and so we're all in a rental pool, which means that I get the same income if my apartment's rented the entire month or if my apartment's not rented at all. That way, it keeps individual apartment owners from fighting against each other and say, well, why do you rent John's apartment out and you didn't rent my apartment out, right? It just keeps it a lot cleaner for everybody that way. And I just again, a couple things to watch out for. Again, are the amateur brokers who don't know what they're doing. You really need to be careful about that. You really need to make sure that you get some good legal and good accounting advice. I've gotten into trouble from bad legal advice and bad accounting advice, both in Colombia. So you got to be really careful about that. I could tell you a little bit about what happened in my hostel, but I'm probably getting a little bit off topic here. The other thing. So a couple other things to think about, and Tomas already covered some of them. Obviously, there's a concern about the changing value of the peso. So recently the peso has devalued against the dollar. And so that could always happen, or of course it could go the other way around. Now, it's my understanding that the main factor of the value of the peso is the price of oil, because Colombia is a big oil exporting country. Mm-hmm. And I think what's going to happen personally is when things start turning around, when this coronavirus situation starts turning back around and things return to normal, that the oil price is going to increase and the peso should strengthen against the dollar. That's again, I'm no financial expert, but that's what I see probably happening in the future. And another thing to watch out for, so if you want to make other investments, a lot of people they'll come to the city and they'll buy an apartment and they'll want to rent it out as an Airbnb, and a lot of people do that. But you should be aware that most of the Airbnbs in the city, I believe, are actually illegal. And every now and then they crack down on that, so you can get yourself into trouble if you do that. So the way it works, obviously that's not a concern here because we're talking about a hotel, right? But the way it works normally is if you want to do daily short-term rentals, that 70% of the people, the owners of the apartments in the building, have to agree to it. And if they don't, you're technically not allowed to Airbnb your apartment. A lot of people do it, like I said, and they get themselves into trouble. Something to watch out for. The other thing, just a couple more things I'll mention, and then I'll cut off. But the vast majority of real estate deals here in the city are cash deals. I think like 95%, and even the maybe 5% or so that are mortgages are generally people put 50% down, and they, if they can even get a mortgage, they're paying 10, 12% interest rate or more on the mortgage that they have. So one of the characteristics of that I've noticed is there's a lot of price resiliency, that it's not as wild of a market as what you would see in the U.S. with everybody, mortgaging their properties to the hilt. So, for instance, one aspect of that is a lot of people thought, well, now that the quarantines have hit and we're in the middle of the COVID situation, that people can come here in the city and pick up property really cheap. And that's not really the case because, people could just hang on to their property because they're not having to pay a mortgage. So they're not having to get that income check every month. And I think those are the most of the points that I wanted to cover. So Tomas, I'll hand it back to you.
Okay, great. Thank you so much, Jeff, for that. And that was really, really valuable. I just want to give the word to Aaron, who is here on the call. Thank you so much for joining us, Aaron. Where are you right now? It's a little bit more sunny than it is here. Where are you right now?
Well, I'm actually back in Austin, Texas. I'll be back in Medellin in a week. Just to give you all a big background, I'm born and raised Texan, moved to Medellin 3 years ago. Started investing outside the United States. I pretty much sold all of my assets in the United States and started investing internationally. It was, at the time, I was learning how to do it, and it's actually all worked out for me. Maybe part luck, maybe part due diligence. So I'll talk a bit about the different kinds of investments. I'm back here in Texas. I was actually looking at property to see if I wanted to reinvest in the United States, given that mortgage rates are historically lower. However, I'm not so sure it's the best move still. So just real quick, I started investing outside the United States to diversify my portfolio. So I still do have like stocks and other things, crypto. I do all sorts of things stateside. But as far as real estate goes, I moved it all international. I saw a question about taxes. I want to address that real quick before I get into some other specifics. So if you establish residency, and so, you know, in my case, I'm a resident in Colombia, I'm not necessarily taxable. If I spend, I think it's more than 183 days per year, calendar year or per 12-month period within the country, for example, in the case of COVID, then you are required to pay taxes in Colombia. Now, that being said, if you work with a local tax accountant, Colombia is one of those countries that will, it's kind of like the United States where they try to tax all your assets globally, but you can deduct the taxes you pay in one country against the other. So your US taxes against your Colombian taxes or vice versa, so you don't end up doubling your taxes or double paying essentially. They're basically, you get credit for it both ways. That being said, let's say you are not a taxable resident, meaning you come down, you live in the country, maybe 3, 4, 5 months out of the year, but you don't pass that taxable resident threshold of basically 6 months or 183 days. In that case, you don't have to essentially pay taxes. Now, it's a little different with this particular hotel project because the hotel as a business has to pay taxes. So when Tomas was showing all of those numbers, operational costs and so forth, by the time you receive your dividends or your payment for your respective shares that you own, you don't have to pay taxes on top of that. So you're not going and filing like income tax now to pay additional taxes on top of the taxes that the hotel already paid, if that makes sense. Now, whether you decide to report international income in the United States, the IRS, that's up to you and your tax accountant. Okay, so on the subject of other, I hope that answers the questions you might have so far. There are other tax advantages. The reason I live outside the country is I save a ridiculous amount of taxes in the United States. As a legal resident outside the United States, I'm outside of it more than I'm in it. And I qualify for what's called a Foreign Earned Income Exclusion, FEIE. A good tax accountant will know about this for expats. Basically what it allows you to do currently is earn $108,000 tax-free, and then you pay normal taxes on everything above that. So why does this matter? Because if you are going to invest in something like this hotel and you get the minimum share, then you may qualify for the bare minimum investment that's required to get, I think it would be like your 2-year resident visa if you decide you want to start spending time down in Colombia a lot more. Well, if you spend a lot of time in Colombia, or in really any country out that's not the United States, then you can qualify for the same thing. And at $108,000, that's already like a 32% tax bracket. So you're already saving about 35 grand on $108,000. If you make more than that from different sources, then you start pushing closer to 40 grand per year that you get back from Uncle Sam come tax season. So this tax season is for now. I'm filing now, and I expect to get back. Last year I got 50,000 back. This year, with tax deductions and everything, I don't know, it's probably gonna be 40, 50 again. Why does that matter? Because my cost of living to live like a baller down there, and when I'm talking like steak, wine, lots of entertainment, lots of fun, I probably spend 36 grand a year, and that's because I'm living it up. You could easily live way cheaper than that for half the price. But I'm talking like penthouse lifestyle, steaks, private chefs, that kind of lifestyle, housekeepers. So I really enjoy my lifestyle down there, and I'm doing it all for free. The money that used to be taxes is now just my living money every year. So that's the biggest reason I do it, is the lifestyle. I own a couple penthouses. They both, I used to do long-term rentals. Right now, they're short-term rentals. The crazy part is, so I bought these 3 years ago. The crazy part is these properties that I first bought outperform any property I've ever had in the United States. What do I mean by that? I mean, I bought them for less and they rent for way more. So the rent ratio relative to the purchase price has just been superior across the board. Not only that, they're all earning in dollars, not pesos. So the peso exchange rate doesn't affect my rental rates, but rather it affects your cost of living. So in the case of COVID, last year, 2019, everything actually got about 15% cheaper because the exchange rate became the highest it's ever been in all of history. It was at 4,000. It broke 4,000, $1 to 4,000 pesos. So while I was still earning the same amount of dollars, my steak and wine lifestyle got cheaper last year. Now, as of right now, 3,529,000 exchange rate. That's actually better than it was pre-COVID. Pre-COVID was around 3,300. If you were to invest at any point in time in Colombia, I think now is a good time because you basically have the historically highest exchange rate. I think it's going to sit right around where it's at about now for a while. I don't expect it to go less than it was pre-COVID, which was around the 3,200 to 3,300 price. The reason that's important is because one, if you're getting paid in dollars, then you got to think about what is your lifestyle. Are you taking that money and spending it outside Colombia? Are you intending to live here and then convert dollars to pesos? We can talk about that some other time. But something else I want to tell you is that I've done multiple kinds of investments. So I've done pre-construction. This is where you pre-buy a property to be developed. So I'm actually waiting on one to be given to me next summer. That one is not renting yet, so obviously it hasn't earned income, but it has already appreciated because they've already finished 2 out of 3 towers in the project. So even if I wanted to sell it now without the keys, I could still sell it for a profit. But I wholly intend to rent it out because I owe nothing on it, no mortgage. When I get it, it's just pure cash flow. Okay, I also bought it all cash, which meant I negotiated the best purchase price versus all of the other Colombians and people who, how would you say it, invested and bought a property, who financed it, which averages about 12% per year in interest to finance. So I basically got the best sweetheart deal on that. Something interesting that happened last year, a lot of the rental market dried up. The reason was people were doing a kind of rent arbitrage like they do in the United States and other places, where they sign contracts, long-term rental contracts, maybe 3-5 years for apartments. Then they turn right around and rent this apartment or sublease it onto Airbnb or to foreigners, and they basically make the difference in their rent versus what they were doing. So that being said, a lot of these people who were doing this could not afford to maintain, 5 different rents. And so a lot of these properties disappeared off market, and it dried up and it shrank by, from what I can tell, about a third. So what did that mean? It meant for the ones that were left standing, like those foreign-owned ones that were all paid off, we absorbed all of the occupancy rate. So I had last year during COVID, which presumably is the worst time ever, 100% occupancy rate. And I did not reduce my prices. In fact, I increased them. And what I found was that people wanted to stay in bigger places for longer periods because of, the lock-ins and things like that. And so COVID actually ended up being my most profitable year ever with my apartments and my penthouses, which is completely surprising to me. And now that it is that way, I actually don't see it. I continue seeing the success to continue at this rate. And I'm continuing to see 100% occupancy rate even now as we enter February. As far as the hotel goes, I've done another investment very similar to this structure. Before COVID, it was performing well. And when I say well, it was doing better than other hotels in the area. And when you look at studies from like Cotelco, which is a hotel tourism association down here, they look at the hotel averages, occupancy rates, things like this across hotel chains, boutique hotels, big name hotels like, Hilton's and Marriott's. The boutique hotel there in Poblado was doing better on average than all of its competitors. And I still see that now, even though the numbers are shit for 2019, they're still higher than the competitors. And that, I think that's due to two parts. One, the quality and design of the hotel, it's attractive. Two, how it's operated and managed. Between those two things, if those two things are done well, then I can see this hotel doing just as well. Now, I mentioned investing overseas as being diverse, my way of diversifying outside the United States, but even within Colombia or within South America, I diversify by putting my money in different types of projects. So hotel projects like this, pre-construction projects, existing properties that are brand new turnkey, and buying old properties and remodeling them. I'm currently looking at lands, and I even bought in a favela, which is a whole nother story. But that being said, all of them so far have been working out really well for me. And I'm actually planning to put more money down there. So I already put offers out on some land to build a separate development. Now, that being said, I strongly believe in where the country is headed, where tourism is headed, and its growth. If you live down there, you may or may not have seen the amount of infrastructure projects going on, the amount of development they're doing, roads, highways, tunnels, expressways. When you invest in the city in that kind of infrastructure, it brings a lot more growth. The other thing is, what else? Me living there in the last 3 years, I've seen it grow just with my own eyes. And I foresee Medellin is already one of the top tourist destinations in Colombia, other than Cartagena. Those are the top two, but it's already one of the top in all of South America, more than places in Chile, Ecuador, Bolivia. Brazil has like Rio de Janeiro, for example. But I totally see Medellin becoming in the top of all of South America destinations. And the numbers produced by these independent research agencies down here, the tourism industry, have all shown the same. And so right now, I feel like the getting's good. We got the best purchasing power that we've ever had, and there's a lot of opportunity, and it's definitely not too late. I guess that's it for now.
Awesome, man. Thank you. That was really, really cool. Thank you so much, Jeff. Thank you so much, Aaron, for that. That was really, really wonderful. I just wanted to get, their take on how they've gone, and Aaron has already gone through the process of buying something like Naku, very similar in structure, very similar in location, just 2 blocks down. Just getting his take on, how you get it done, and he has penthouses and is looking into different kinds of real estate. So I think you can be really creative when it comes to real estate, and I wanted to get his take on that. So thank you so much for that. We're going to answer some more questions, and then we'll go through the floor plans really quickly. And then if you guys want more information, further information in regards to the prospectus, in regards to the investment package, then absolutely we'll go into that. Okay, so we have a question here from Luis Alvarez, which said, would you be able to provide a copy of the entity agreement that would spell out the ins and outs of the holding company, something similar to an LLC agreement in the U.S.? So Thomas actually asked about this document a while ago, and essentially what we have here, and what that's called in Spanish is called articles of incorporation. So we'll be able to send that to you in Spanish. You can easily translate that to English, but we can definitely send that your way, and that's something that we do have. Okay. Ian Koskela asks, will the hot water and soundproofing be better than Diaz Hotel? That's a great question because that is a major issue in property management. It's soundproofing and the water heaters, definitely. So something that we're thinking about exactly, and the soundproofing is actually comes from the windows, and it comes from like the doors. If we're able to connect, we need to have really good systems for that. So I think that's a great question, and it can make or break your experience, right? If there's a lot of noise, and there's no hot water, then that's going to be a shitty experience in essence. So yeah, we're definitely thinking about that. So thank you, Ian.
If I just may add to that,
Yeah.
I just did replace all my windows in a penthouse I just remodeled, and I got some really nice windows. But I can tell you the cost difference between the soundproof ones and the ones that are insulated, block heat, but still let in light, was almost double. Windows are expensive down there, but I do believe that maybe you can get a good deal for a lot of windows, but from a quality perspective and the experience of the guests, I do think it's really important to have. I did not. So what I did is I strategically opted for soundproof windows only in the windows that faced the noisy side of the building or towards the side that was going to be noisiest, and then for the windows on the other side that did not receive noise, I chose not to, and that was just something personal, but I just want to throw that out there. The reason this matters is because if you're building the hotel, and then you got to realize that and you opt for these windows, you will have a slightly higher build cost just for that line item. So it'll take you just slightly longer to get your money back.
Yeah, that's a great point. Thanks, Aaron. Yeah, really important. So Luis asks, are you aware of how dividends and income would be treated or reported to outside countries, for me in particular, the US? So yes, actually Aaron touched on that. We do is the corporation pays taxes. You don't get double tax on that income, so you don't pay taxes once you receive that income. You just pay a 5% dividend distribution tax. And then what the IRS and what the DN does and what you can do is you get a tax credit, and so essentially that pays off the amount of income. And essentially the way it's done is, let's say you made $4,000, $5,000, $10,000 of income in Colombia. Well, what they look at is, all right, how much taxes did you pay in Colombia, and how much would that income have paid in taxes in the US? What you get is a tax credit, and if there's a difference, then you need to cover that difference, right? But essentially what you do is there's no double taxation between the two countries, and it's essentially already paid into what you need to pay, and then you just cover the difference, okay? All right, Ian asked, the co-working revenue is about 30% of the hotels. That's pretty high. What are the occupancy rates and rates based on? All right, so I don't know if you missed part of the presentation where we saw where we got the numbers from, but the good thing that we can do with these numbers is that we can play around with the occupancy, right? So let's say that we get a 50% occupancy, right, in the co-working instead of the rooms. So let's say we get 50%, all right? What that means for the income is we had an income before of around 14 million. Now we have an income of 13 million pesos if we only have 50% occupancy, right? That takes the ROI from 11 down to 10.83%, but you see that it still makes sense, right? Let's say that, we get 20% occupancy here instead of 50%. Well, the way that works and the way that that's going to look is, right, we have 11 million now of income. It brings it down to 9-10%, right? But so essentially what we're able to do is play around and look at worst case or best case scenarios. And what we're looking at in this term, and if we're looking at the data correctly, then at the point where we're launching, which is 2022, this has already been through, most of the pandemic, and most people will be, vaccinated by this time. So this is based on that, but we also consider a best case and worst case scenario, okay? Ian asks, are there any restrictions on Borneo Capital's ability to buy the same shares we are purchases to prevent them from gaining more than 50% control? So Ian, would you mind explaining to me this question and elaborating a little bit more into what you mean by this question?
Well, my concern is about dilution, right? I wouldn't want the original investors to gain more than 50% control, put the question of whether more shares should be issued to a vote, and then have the power to cast more than 50% of that vote to issue more shares, thereby diluting our stake. You
Gotcha.
know, I wouldn't want any single investor to have more than 50%. How do we protect ourselves from dilution?
Good question. So that's a good question in terms of, is my investment going to be diluted when, these people go and vote? So the short answer is no investor can buy more than 30%. And actually what we've done from the beginning is give the investors more power through more ownership, right? You guys own 54%. We own 46%, right? The initial investors own 46%, the external investors own 54%, and no investor can own more than 30%. So what that guarantees is that, and essentially to make another emission or another share issuance and dilute, we would need about 80% of the votes of the corporation in total. So in order to prevent that, we keep those restrictions so that we have a grasp on that amount of control that is given to any single investor. Does that answer your questions?
Perfect. Thank you so much.
Okay. Yeah. Awesome. So Melissa Wynn asks, how many beds are in the penthouse? So the number of beds that we have in the penthouse is 2. We have 2 bedrooms in the penthouse. You can actually see the floor plans right here, right? We're going to go into the floor plans really quickly, but just so we answer your question in regards to the penthouse, right, I'm just going to scroll through the co-working and through the actual jacuzzi rooms, and I'll just go straight to the penthouse. So the penthouse level is this one, okay? So half of the floor, I'm just going to zoom in here a little bit more, half of the floor of the 7th floor is, somebody wants to join. Yep, all right. So half of the building, right, of the storage, and this is for firefighters and technicals of the machinery for the pool, right? So you come in here through the elevator, you come to the penthouse, and then you have 1 bedroom with a private bathroom and a shower. You have a 2nd bedroom with a private bathroom and a shower that is separated from the 2nd bedroom, and then you have this living area right here, right? So I hope that answers that question on how many bedrooms the penthouse has. Ed K asks, your nightly rate projections are based on the high seasons rate or average out between high and low seasons. So Eddie, this is average out between the high and the low season, right? Technically what we have is a base rate that we're able to adjust for the high season or the low season, right? So that's our base rate. For high season, we usually, bump that up 10-15% because we're able to charge more. And for low season, what we do is we actually lower that, or we provide monthly discounts so that people can stay for longer and keep that occupancy rate high. So this is an average of the high and the low season. Okay. Thomas asked, can you talk about taxes? Do we have to pay income tax on our income? Does that change if we take up residency? So this is actually called the progressive tax, all right? It depends if you're a foreigner, a resident or non-resident, whereby your tax situation changes. But just like Aaron stated previously, you don't necessarily have to pay taxes on that. There are tax brackets that it's a gradual or progressive tax, meaning if you make a certain amount of income, then that's non-taxed. And if you make more income than that, then that is taxed on different levels. So the levels start from 0 to 40 million pesos, that's 0% tax that you're paying. From 40 over to 61 million pesos, you pay 19% tax on that difference. And then it goes up 25%, 35%, and so forth. But you don't actually have to pay taxes on different amounts of income here in Colombia. Okay, Ian asks, is this project paid out to investors in dollars or pesos? To what degree is there exchange rate risk to the income that we receive? Good question. So we pay this out whatever rate you want us to pay. If you want to get paid in dollars, we'll pay you in dollars. If you want to get paid in pesos, you get paid in pesos. But essentially the income is produced in dollars. We change it to pesos through the corporation because the rates that we receive through Airbnb, through Booking.com come in dollars. Okay, so that's exchanged the pesos. And so the company needs to produce or needs to report the pesos. Now we have a peso amount that you get paid out every year, and you can choose to get paid in your bank account in Colombia or your bank account back home in the US. What you need to pay in that case, if you want to get paid in dollars, is the wire fee to exchange from pesos to dollars. Okay? And so there is exchange risk in the sense that if you're changing back dollars, well, you run across the risk of changing those back at that exchange rate. But what we recommend is keeping those in pesos and reinvest them back into the Medellin market if this is a market that you believe in long term. Thomas says, am I getting document translated? Yes, you get everything in Spanish and in English, so you know exactly what you're signing and what you're investing in. Okay, everything is in Spanish because it's what is legal by law, but we send everything in English as well, so you know what you're signing. And the last few questions are, how much tax do you pay on the sale of the shares in 5 years or 10 years if you roll the sale proceeds into another real estate project in Medellin? So the way that this works, Mike, is that if you sell any fixed asset, where it be a house, whether it be an apartment, where it be this investment, if you sell before 2 years, you're paying a 35% tax on the difference or on your profit, okay? After the 2 years, you're paying a 10% capital gains tax on the difference, right? So it's a lot better to sell this investment after 2 years so that you don't have to pay that 35% tax. And it doesn't really matter if you roll it into another project, you still have to pay that property tax or that capital gains tax. Okay. Then ES asks, what is the minimum investment to qualify for an investor visa? Okay. The minimum investment is 100 minimum salaries. The minimum salary is 900,000 pesos roughly, so that's 90 million pesos in Colombian pesos. That is roughly $25,000. Okay. And so this investment is 122 million. This exceeds the level of 90 million, right? So you're able to qualify for an investor visa at the lowest tier of investment in this project. Now, there's two different visas that you can acquire through investing in a corporation. There is the 1 to 3 year visa, which is that 100 minimum salaries one, all right? And then there's the residency visa, which is 650 minimum salaries, or roughly $172,000. 590 million pesos. All right, so there's the 1 to 3 year visa for 34,000, or the 172,000 visa, which is the residency visa. You get a cedula, you're able to get health insurance, you're able to have all the benefits of being in Colombia and being a Colombian. Okay. There is the likelihood of getting that. There is less likelihood of getting the investor visa than the residency visa, just because you're showing less investment, right? The more investment that you show towards Colombia, the better or the more it increases your chances of getting the visa, okay? For 5 free days, what unit type is provided? The penthouse. All right, so it can't be the penthouse because that's the highest earning unit, right? Everybody wants the penthouse. But so what we're going to do is we're going to leave it to a vote, right? And the most likely scenario is that we're going to raffle the penthouse between different investors. And then the jacuzzi rooms and the smaller rooms are the ones that we're going to give out on a free night basis to the investors. But what we want to do is give you guys the vote, and this is going to come up in the shareholder assembly, just like it has for Aaron, for example, that invested in that other project, where they make votes on that, how many free nights and the perks that are included in the investment. And lastly, the final question that we have is, will investors be provided with a copy of the deed to show Borneo SAS owns the lot? So yes, the way that works is that currently the lot is going to be put in escrow, okay? That escrow is called Alianza Fiducia. The lot is put in escrow all the way until the construction is finished, and then once the construction is finished, the escrow company delivers the deed over to Borneo Capital SAS to show that Borneo Capital SAS owns the actual project. So the stage in which that ends is we have commercial success, we start construction, the construction and the actual lot is under the escrow for the time of construction, and then once we finish construction, the lot is taken up by Borneo Capital SAS, and that is when it's going to be done. Katie has a question. Go ahead, Katie.
Hey, yeah, Luke here. First thing I wanted to say was I thought that I've lived in Barranquilla. I lived in Colombia for 4 years.
Nice.
I thought you did a super eloquent, great job of explaining Medellin, and it was really accurate. You did an awesome job with it. Thanks for the whole presentation.
Thanks.
My question that I have is, as far as the kind of unique setup with the rooms where you can kind of close the door, open it up, do you have examples of this before in other projects in other areas in Medellin? Like, is it kind of groundbreaking? Is it different as far as that? Or what is kind of the past experiences? Is it a new wave? Can you kind of expand on that?
Yeah, so this is actually, we have no other projects to show you with this because this is the first time we do it. And we think it's pretty revolutionary that you're able to connect these rooms to one another. We don't actually know that in any other project in Medellin. This is the first time that I know that it's being done. It's been done before in other parts of the world, but in Medellin it's never been done. So I think it provides the product more adaptability when it comes to, you know, being 2 bedrooms, 3 bedrooms, 4 bedrooms, but that's brand new.
Okay, thanks. Yeah, I've sat in on a few of these, and you did an awesome job. This is great information, so thank you.
Awesome. Thanks, brother. Thank you for that. All right, we're gonna answer Ed's question. Do our monies get deposited to escrow as well? No. So your money gets deposited to whatever bank account you indicate, right? If you indicate a bank account in the U.S., we'll send that to you in dollars. If you indicate a bank account in Colombia, we'll send that to you in pesos. But it's not deposited to escrow. It goes through the corporation, and then every year it's distributed as dividends. And then Mike asks, if the penthouse is empty and available when you go, can you get a free upgrade? See, everybody wants the penthouse. Yes, it's something that if the building is empty, right, and is unoccupied, and the investors are able to do it, then yes. What we can't do is be in a situation whereby we block nights from the other guests. So if the building is empty and you're able to utilize the penthouse, then absolutely yes. All right, guys. So I'm going to go through the floor plan super mega quickly because we're expanding a little bit on time here. But I just want to go through the floor plans really quickly, and then we'll send you all the information via email. So just for the building, right, this is the lobby. This is where people are greeted. This is the area of how we foresee the bar and the restaurant to be. This is 200 square meters in total. And so you have the access to the restaurant and the access to the apartments separated. And then you have your restaurant space right here. And I'm just going to go through these really quickly so that we don't take a lot more time. This is our first level of co-working. We have offices for 7 people, offices for 9 people, and a meeting room, right? We have individual Skype booths as well. We have a lounge area with puffs and playstations and hammocks, a place to relax and kind of just kick back. We have the bathrooms. We have more co-working spaces, and then there's a bridge and a living wall that is 8 stories in total for you to walk by, and that's the co-working. This is the second floor of co-working, so this would be technically the third floor. All right, we have offices for 9 people, a meeting room, individual spaces, another lounge area. We have a kitchen with a private chef only for the co-working, right, which is serviced by the restaurant. And then we have offices for 7 people in this part right here. Then we go into the jacuzzi rooms, all right? So you're able to connect through these walls right here. So these can connect through here, right? This one can connect through to this, because this is called a circulación. So you're able to connect this room to this room, right? This is connected to this one. These are the jacuzzi ones. The other ones don't have a jacuzzi and are the small ones. These are twice the size. And then these are the super potent rooms, which you're able to connect through a bridge, and you're able to connect to this room right here with a kitchen. All right, these are your jacuzzis. This is your 4th, 5th, and 6th floor. All right, we have smaller rooms here, and the density of the building goes like this. So we have smaller rooms here on the higher floors, but also having the ability to connect through this bridge and through the walls right here. Okay, converting them into 2, 3, and 4 bedrooms. This is the floor that we showed for the penthouse. Half of this is for the penthouse. The other half is for the common areas, the pool. You just walk up the stairs and you're right here. And then this is just a view from, this is the same, right? It keeps the same structure because there's a hole. And this is the 2nd floor or the rooftop of the penthouse. All right. So if you guys want to see the contract, which we have here translated to English, if you guys want to see all the documentation that we have for the project, you're welcome to ask that. We're actually recording this video, so you're going to be able to watch it again. And then I meant, how is our money secured for the building is built and the hotel is operation? Ed, could you explain a little bit further what you mean by that? Ed, are you there?
I think he's talking about his deposits. Like, are you depositing it into an escrow account?
Oh, okay, got it. So what needs to happen is the money needs to go into the corporation because we're issuing shares from the corporation exactly. So what you need to do is transfer the money, and Aaron has already gone through this. What you do is you send an international wire directly from your US account or your Europe account. You need to send it in US dollars because what we're doing is the process of monetization, okay? So what we need to do is an accounting equivalence between the money that comes in and the shares that are issued, and so that needs to happen in the corporation. But when the construction starts, the lot is going to be in the escrow, so all the money that comes in needs to be through facturas, through the bills, so it's all handled by the corporation and the escrow. But the money comes into the corporation first because that's what needs to happen in order for us to issue the shares. Does anybody else have any further questions? And if not, I'd like to thank you all for coming and joining this webinar. Ian is saying basically you're buying shares, not actual property, so it goes to the corporation. That is correct. Exactly. You're buying the actual shares of the corporation, which owns the asset. All right. So you don't have the liabilities of having the ownership. So we're actually recording all of this. We're going to send you guys the recap, and we're going to send you the recording of this phone call. Thank you all so much for joining. This was amazing. Thank you, Aaron, for joining in. Thank you, Jeff. Thank you all for chiming in and your questions. I hope this was very informative. I hope you guys enjoyed this. And Carolina and Sophia, which my right hands on this. Anytime open for your questions. We'll send you a recording on this, and if you want to sign up, then you're welcome to do it through the channels. Write us to our email, visit springlivingmedellin.com. Also go join us and follow us on Instagram, nakua.provenza. And then we'll see you guys on the other side, and if you have any questions, we're available through WhatsApp and email. Thank you so much, and hope you all do well. Ciao, ciao. Bye.
Thank you.